Morning, good afternoon, good evening, wherever you are. I just want to walk through first action of Euro USD. This is the first action on a Friday. So Friday pretty much starts from here. This is a 5 minutes time frame. This is NFP. This NFP candle. So I want to walk you through this price action. When you look at this, you see a lot of chaos. There's no structure at all to trade from. But there are so many opportunities right here. If you know what you're doing. I got in, I got chopped, and I ran. Okay. So I was able to know that this is NFP is a buy because we literally failed to break below these levels here. You see, we are chopping from up and we failed to break below. I sent this in my Telegram. I'm like, you know what? We are gonna explode up to that level I highlighted in the previous video. Without anything in the price action is literally disorganized. The things you need to know is you need to have some guiding principles. Put the previous day's high, previous day's low, and you'll be good to go. Okay. So to simplify things, I've already labeled everything right here. So you see, when we put lipstick on the charts, now we're able to see clearly. Now we'll try the 1 minute time frame. In the 1 minute time frame, let us see. There were so many endless opportunities. I don't know if it's just me improving on reading price action, or it is just there were so many opportunities on this ranging day. This is what happened immediately from London. When London opened, so London took the previous day's high, and we know that when such highs are created and taken off, they support price. Okay, this is the previous day's high. Push it a little bit out here. Okay, so previous day's high is right here, but even this is okay. The week is also important. So this is we took the previous day's high. This is Friday. Okay, and we literally failed to displace above. You see how we come, go below, this place below, fail, like we literally range around these levels. Okay, coming on to London, this would have been your trade following market structure shift. Right, for this could be a low. So this is putting a fair value gap, like all these are back and forth, up here, up down this way. You put in a fair value gap on 1 hour. So how would you know this would be going down? We wait for opening of London session, okay? And you basically trade that at 1 a.m. 1 a.m. candle open. Here we were ranging, as you can see. We break below. Now when we started to break below, and we're now breaking order flow, taking out. Now we see market structure shift right here, following the laws of market structure shift. So market structure shift. When you look at this high and this low, I will not consider this as a leg. I will look at this high and this key level. So instead of me going up here to look for like a breaker up here, I will just look for any key level and any SMT if created with ES. So let's check what happens to ES. So we are right here in London. Right here. What happens to ES in London? At this point, we want to look for SMT because we literally, when we take out a key level of liquidity, that is when we anticipate a change in direction or a continuation, depending on how price action behaves. So you see how we put in SMT at this level, okay? After a market structure shift and the retracement, that's when you want to look for SMT. So this is the SMT. When we put in SMT, now you can wait for extra confirmation, or you can sell at this true inversion. I call it a true inversion because one, put in a market structure shift here, ignore this one, and we retrace, put in inversion. You see how price comes and gets support here. But this is not a good hour to trade, okay? Because you may not be knowing. I wanted to walk you through the signatures with price at a key level. Break below, how do you know it's gonna drop? If you wait for a retracement. Should we break this low? Then we literally know that it's gonna drop. Because this low is supposed to be protected, okay? The low that puts in a retracement to go up is protected. So if we come drop below, we expect this low to hold if we are bullish, okay? If we are bearish, it is gonna break. That's what happened right here. Then we know the bearish order flow is starting. Then we just start look. We'll see this on the next level. Now coming on to the next level, we have a 1 hour fair value gap we just put in. Look at what price does. Same thing, breaks below. We wait. When we break below this one, then we know we've shifted. So break below, look for now the true value. Now this is when you enter your trade. Stop loss just above here. Rejection here, you enter the trade, take it to the 1 hour fair value gap. Same story. Tap the key level. When we break below, you know we are continuing. So, but whenever you see this signature right here, you see this, it's supposed to have taken all your profits up here. Here shows we are about to reverse, and we're supposed to either take off all of our position, or because yes, I had reached a key level. This is a daily level that was 2 days back. Okay, I keep this for 5 days on my charts. I want to look to refer the previous 3 days highs and lows. Still use them as my reference points. So previous 3 days highs and lows. Okay. Now when you see this, remember in the trade we wanted to sell here, we sold and then we missed this trade on London session, on New York session. This was like Wednesday. Same price signature here. If this is Friday, now I want to take you to Wednesday and you'll see what I'm telling you. I'm going to look for the price action of Wednesday. You're gonna see the same signature. Okay? Have it in mind and you're gonna see the same price signature. Make sure you don't get lost because this thing is just so similar. Yeah? The same signature. I think the problem I made this day was to highlight these so many laws right here. Then I got so chopped up here. Have you seen the same signature? So we sold right here, and this rejection like this, we took off. Then we missed this low because literally the inversion that takes liquidity should hold. Okay, so inversion after sell side, it should hold. Okay, now let me remove this. I think this one distracted. I got distracted on this day because of the short I was in. This is 9:30 open. We took sell side. Inversion that takes sell side. If you're bullish, you to hold. Okay, so this is where your stop loss can be. Stop loss can be set below here. Okay, so do you see this price signature is the same signature? So reversal signature, which happened on 30th April. Go to your chart and look at 30th April at 10 a.m. Okay, it is the same signature, same reversal signature. Okay, so I'm just walking you through price action. And these things, when you start to see them, they will keep repeating and you'll be able to predict them before they happen. I literally get so many trades and I end up losing most of them because I think I'm still struggling with risk management and being too greedy. I take my trades and I hold them for long. Now, you see the price signature. Sometimes it will be so perfect, sometimes it will not be so perfect. So now like this day. So So if you look at this price action, see here, this is what time. So what guides you is time and price. Time before price. This happened at exactly 9:59. We take out sell side. Okay. This is a sell side. Okay. You have to always look at that time. Do you aggressively sweep liquidity below? Then you see this signature in your head before even it happens. Okay. Sell side taken. We come. And when we come like this, I usually want to see bearish price action. And then like this, I'm going to enter. I think I took this trade. ICT took this trade too, and we rode this trade up there. Okay, so this was the trade. It's the same signature happening at the same time. This is a 10:50 macro. See this? 9:59. 9:59. Okay, have you seen 9:59? 10? Now let's go back and you see. When you come to this chart, where is it? Where's first section? So this signature, this is the signature right here. So I want you to refer to that signature so that you learn it. It's gonna save you a lot and it's gonna accelerate your learning. So we're looking for 9:59 and you're gonna see what happens. Same price action. So look at the time. 9:59. This candle is the 10 a.m. It opens right here, low, open low, high close. So in your trade, you hold this trade when you know the bias. Okay. So this happened because I was still developing this model, and we got so chopped on this day. On this day, we got so chopped because we were looking at and getting scared at all these levels. Yet it's actually not okay. When you know the bias, it rips through these levels. When price action is bearish, it rips through these levels. If it is bullish, it will rip through these levels and they will act as support. So instead of us trying to sell, we're supposed to buy. Like we come, break above, put in another block, buy more. Break above, put in another block, you buy more. Until you take out a liquidity level. Because every time we take liquidity, we expect a retracement. Retrace. This is a breaker. I told you what for retrace at OB, then you buy. So this day we got such because we're still learning the strategy, but I have seen improvement so far. So now let's go back to today's session. Today's session was so choppy, but I am really surprised that I can read it and I frame good trades in such a choppy session. So meaning that this strategy is gonna be a good one, even when the price is ranging. If the price is in one-sided, we will take these explosive moves. So sell side at 9:50, you take your trade, you take it, then always take off profits at the next high and also break even. Some days they will explode, some days they won't explode. Now look at this signature. This is the same signature but happening at another time. If we take sell side, now here I think I was still learning that signature. Every time we take sell side and we break above, we expect at least a nearest key level or a high. So you see that? Here we're supposed to be buying because we took sell side, break below. We can retrace, but we will not retrace until we take out this one. So I think that was yesterday. Okay, now let's go back to today. Today's session. Same signature. So I want you to be. This is the same signature right here, happening at 9:50, but happening now this time. So if you see this signature happening, and we are at around 2:30, we are coming to 3. So you expect the silver blade to go up. Okay, this is the silver blade hour coming at 3. You see this? It will finish our trade. Comes, it retraces into a key level, explode. I told you that what is so important is the inversion that takes what? That takes liquidity. Okay. Once this is broken above, you know that we are good to go. So inversion, that top liquidity. Always label these ones inversion after sell side or inversion after buy side is taken. This is so important. You have to keep watching this. Have this now when you reach here, you take Asia lows. Okay, how will you know that you are about to reverse? We aggressively take Asia lows. We start to chop and aggressively take out that buy side. Now the inversion that takes out liquidity. Now this Asia low is also acting as a key level. Remember, these lows and highs are key levels. Here, I was supposed to buy, but I was not at the chart. So when I came, I saw that put in this signature. And here we had just reached the previous day's low, aggressively broke above. Then I knew most times this is going to act as a breakaway gap in most cases. So this is where ICT doesn't tell us how and where do breakaway gaps happen. So breakaway gaps will always happen around this point if it is a macro. I've noticed this several times. So you want to see this gap remain open and you don't want to see price retrace back here. Once we every PDRA is going to support price. As long as the liquidity is not reached, you see we don't close below this inversion, so it acts as a support for price to continue going higher. So that is how you keep what? You keep buying, you buy higher. So now what happened today? Let me just maximize this. Is that what happened today is that I bought here. I didn't take profit, so I was targeting this high. I thought price was coming up here. Okay? Because I was literally bullish on today. So the price came, gave me over $400, reversed, took me out. I entered again. I think I was like, okay, fine. I think we may want to go and sweep the London lows again. I went short here. You see, I'm going against the trend. I'm going short. Yet it is a market structure shift, retracement to OTE. Then up. And this is not a reversal signature. So the reversal signature is this one, take sell side. You see this candle. This is another with consolidation, break above here. This low here, which is once we break below this low, okay, this will act as support for price to take us lower because one, we have traded, this reversed on me, so I took this again because I wanted it to go up. Came back and took me out because I was not even taking partials, I was not even going break even. So these are the things I'm learning. I know that if I'm right, I have to keep trading my stop loss. So this is a perfect reversal signature. Now here next time I'm gonna buy because I know we're literally bearish like markets every time we buy up to the midpoint. Anytime in the midpoint when there is a key level, price can always reverse. So this is just London session trading. You have to keep labeling these levels as they print on chart. The 1 hour fair value gaps are so important. So we have the low of the 1 hour fair value gap. If you want to this, like I don't like to do this on my charts because there will always be a lot of color. So I just put the upper, lower, and then consequent encroachment. That is how I like to label my fair value gaps instead of doing this. So you see how we literally get support from a consequent equation and we break below. So this is the reversal signature. Wait for retracement into OTE. In London session, always wait for OTE because the first people to sell will be taken out. When this came and took them out, we can always sell more. It is always engineering liquidity. It will not take this out. So you always have to see levels you're targeting and have a fixed 3R. Okay, your trade should always be 3R, at least 3R. If you stick to 3R, you'll win most of your trades. Even here, if I had sticking to 3R, I would be in profits, but because of greed, which I'm working on. So when you see this reversal signature here, this is also a reversal signature. Consolidate momentum, at least we'll hit this high. Okay, because I told you this is just a ranging profile. This is NFP day. We trade the ranging profile. We buy high, sell low, buy high, sell low. So we buy low, sell high, buy low, sell high, buy low. What else do you think is gonna happen? Sell high. Okay. This is a typical ranging profile because of pre NFP before we break out of this range. So what guides you are those key levels. Let's look at this trade here that you could have also taken here and given here 3R. The moment this momentum candle closes, you enter your trade. So this one, you see what guides you? It's a 1 hour fair value gap low here. It didn't touch, but we have this daily high also. So this was a high risk because we also have just next to it is the 1 hour fair value gap which can turn price around. So you see that now. Once you take, you always label. We've taken sell side here, hit a key level. The next target is the next sell side or buy side in a ranging profile. Remember, we take off the buyers, knock off the sellers, knock off the buyers, knock off the sellers. So we come here, we knock off from the beginning. What happened is that we tell people that we are going to go bullish now. Now we sell. After 3 hours, you observe. You see a reversal signature, we have a key level. Okay, we have OTE retracement. So now we start to manipulate people. So those who are still holding positions, we deceive them that we are still going up. Come, take off the loss. More people will come and join the sales here. When they join the sales, what happens? We take them off. So the buyers now trail their stop loss here and add more positions. What happens now? We told you first we sell high. First we sell now. At this week, either consequent encroachment. ICT tells us to label these weeks as key levels. These ones here. This week, the way we treat a fair value gap, a new day opening gap, we should be the same thing how we treat these weeks. You see how price literally stops at the consequent encroachment. This shows you that the order flow is bearish. We don't even cross above the of this week. Now at this point we can look for SMT because you can now know that okay, we'll suspect some SMT here. Let's see. Where were we? I think we didn't get SMT. Yeah. So that's it. So now I told you it's a ranging day because we have NFP. Sell high, now buy low. 1 hour. I told you that after L sell side is taken. Sell side is taken. I would literally, if I would buy this. I would wait for this candle to go, and then I would buy here. And then this is a TP1 actually. Then when it comes here, the inversion that takes out sell side is so important to hold price if we are still bullish. So we are buying, going to target this high. Okay. Once we target that high, then we again look for the same thing. We take key level, OTE. Okay. The first will be taken out. If you are selling here, first target here and go break even. Now we come here again, take off these guys. Creating an inversion that takes out liquidity is so important. You can sell the next liquidity point, which is this low. So that is a ranging profile. Now the ranging profile has come to an end and it says 7:30. That is when you stop the ranging profile. Now it's time to real trade now. We are at a 1 hour FVG high, which is a key level. We take sell side, put in a reversal signature. This one you will know them with time. You know that price is about to reverse when you are key level, you have weeks. We come here, we take out all these people. We almost put in SMT, but we fail. Now here is when I told people that you know what? NFP is gonna be bullish because if we were to go bearish, would this fair value gap would not hold, and that's how it pushed higher and higher and higher, and it is coming here. Previous monthly, consequent equipment, also 2022 low. So that's our target, and we have higher targets above. So ideally, that's it. And for any questions, you can leave them in the comments, and that's how you navigate a ranging file. Price action was so beautiful. I think it is so beautiful to trade in a ranging profile when you know what you're doing. So this one, without any labels, it looks like chaos. See that? Without any labels or lipstick, price action looks like chaos. One will be like, how do you trade this back and forth, back and forth? You see that? We were literally just here trading this back and forth, back and forth. So next day, actually NFP week is so beautiful. Trade all days, I think, if you trade this style. Okay, that is it for today. Okay, what don't